So we had that issue of one. The main issue with that was that we were still working with the centralized currencies. I'll talk more about centralized and decentralized currencies. That's what the major thing we are here to talk about actually. But even with that one, imagine you have to send, let's say $1 million to someone in US using your phone. Okay, you are working through a banking system, and that banking system, it comes with transaction charges, it comes with delays, it comes with so many bureaucratic processes that you have to pass through to send that amount of money. Sometimes if it's just a small amount, it's not really an issue, but when you want to transact huge amounts, usually it becomes an issue with bureaucratic processes, huge transaction fees that you have to pay, and all those banking things coming in. Okay, so, and the other issue was that all these systems that we've gone over so far, starting from the metal coins all the way up, it was running on what's called the centralized finance, where the value of that money was determined by the government. And I'll talk more about that when I talk about the politics surrounding money. So in order to make it more convenient, okay, we moved to the era of cryptocurrencies, which sought to kind of solve the problems that were associated with the centralized currencies that we had. I'm not going deep into this area because I'll still talk more about it as we go on. But just know that this is where we came from. This is where we are now. It has all been about convenience for the major parts until we get to a point where it went beyond convenience to politics surrounding money and finance, where cryptocurrency actually came in and made a difference. Now, talking about the politics of money, okay? There have been so many issues in the past, starting from the beginning of time when you talk about politics of money. But one of the major things that happened in history that affected the way we see money today was in 1994. That was just following the end of World War II. Most of the world economies were crashing. The global economy as a whole was crashing. And the United Nations wanted to find a way to revamp the economies and stabilize the crisis. So they met somewhere in 1994, I think somewhere around June in that year, in the US, Bretton Woods, one of the places, the towns in the US, to decide on how to find a lasting solution to the global economic crisis following World War II. And the birth child of that particular conference, among so many, was the IMF, the International Monetary Fund. And there's one also called the International Bank for, what do you call that? Development. I've forgotten the full meaning, IBRD, something like that. But the major thing that came out from there, among all these outcomes, was what we call the Bretton Woods system. And the Bretton Woods system, what they decided to do as a way of trying to stabilize the world economies was to find a single currency that would become the center of all the world currencies, so that every other country currency, its value determined by its relation to that particular central currency. Okay, and they chose the dollar at that particular conference because by then the dollar seemed to be the strongest currency by then. But for it to have real value, the dollar also needed to be backed by something tangible, something physical that you can feel and know that this is money, this is what I'm holding, this is my money, it's physical. It's not just some paper that somebody created and said, this is money. So they realized that the best resource or mineral they could use to back the value of that dollar was gold. So the details of the Bretton Woods system, I just summarize it in this slide. So all allied countries had their currency fixed to the dollar. And that was the birth of the current exchange issue that we have today, where almost every currency is linked to the dollar on the exchange. Okay. And that system was running. Now, what happened was that based on the relation of your currency to the dollar, you had an amount of gold, which was physical gold held in the US. at the Federal Reserve. So that was where the creation of the Federal Reserve also came in. So the Federal Reserve literally was just a place where physical gold was stored, and every country's currency, or let me say value or wealth, depending on its relation to the dollar, was determined by a certain amount of physical gold, which was sitting at the US Federal Reserve. And whenever you wanted your money, they'll deduct it from the amount of gold that was sitting at your Federal Reserve, and they'll give it to you and all that. So, but at a point, most of these countries realized that the US government is like they were beginning to spend so much dollar, which seemed to be more than the amount of physical gold that was actually present at the Federal Reserve. And most people were sensing that there was some kind of fraudulent activity going on at the Federal Reserve with the US government. So a lot of them started withdrawing, asking for their money in actual gold. They didn't want dollar of currency again, like paper currency. They wanted the actual gold sent to them in their account so that they also hold it and know that this is my money and I can feel it any day I want. Okay. And at that point, it started creating a lot of trouble for the US government because actually they didn't have the amount of physical gold that they said they had to back the amount of money in dollars that they claimed was available. So somewhere in 1971, the US government decided that they were going to stop the Bretton Woods system, where the dollar was no longer going to be backed by any physical or tangible resource or mineral. Okay, and that was the creation of what we now term the fiat currencies. So fiat simply means that we have a piece of paper we call money, but its value is not backed by anything. The only thing that gives it value is that the government tells us that this piece of paper is worth this amount. And they promise us that if you are holding this piece of paper, you can use it and buy this amount of goods or services. So the value of the money from that time, after it was detached from the gold reserve, was now dependent on the government. Complete central control. So the government determined the value of the money. The masses were working for the money, but the government determined the value of the money you held in your hand. So that's what we call the centralized finance based on fiat currency. Okay. And that centralized system, which puts control of the value of money in the hands of the government, to most people was not really fair, and people were looking for solutions to that, and that was the birth child of the cryptocurrencies. We'll get more into that when we talk about blockchain and we go on. But we also need to understand something. We need to understand that there are trends, okay? We have trends that we must follow and understand, especially when it comes to money and how we make money. In the 20th century, most of the millionaires and billionaires in those days were people who were taking advantage of the Industrial Revolution by then. And most of it started around 1908 when oil was discovered by Rockefeller, who eventually till date they claim is the richest man on earth after King Solomon. But we also know that Mansa Musa, an African emperor some time back, is actually the second richest in the world after King Solomon. But that is not up for debate for today. But that industrial era, people became rich through industry. Okay, so you can talk about the likes of J.P. Morgan, John D. Rockefeller. You can talk about what do you call him? The father. If you've watched The Men Who Built America, you get that storyline. And in those days, if you could really get into industry, you're about to make money. Okay, but we all know today, people who are working in industry are not the richest people in the world. The people who are the richest in the world today are people who are moving with a new trend, which is technology. And at the center of technology is one major thing, which has become the new oil of the 21st century. And that thing is software. Software has become the new oil. For you to understand this, let's look at the richest people in the world. From Bill Gates, Jeff Bezos, what's his name? Elon Musk. All these people started with software, and most of their what will I say? Their portfolios are in software companies. Why is that? Because software is the new oil. Okay, and the only way you can actually build, excuse me to say, financial security is to find a way to own a piece of this software revolution that we are currently in. But if you can't find a way to get into that revolution, you might still be working as if we are still in the industrial age. And no matter how hard you work, at best, you can become comfortable in life, but forget about ever building any substantial wealth that will help you to make a certain level of significant impact on the world. So software is the new oil. And the blockchain is one major part of that software, which has helped and is still helping create a lot of wealth, okay? And that's why it's important that you get to understand what the blockchain is and how you can leverage on it and the opportunities that are coming out of that blockchain industry. The definition is there. I'm not going to read, but what we need to understand is the blockchain was created as a way of creating a decentralized system. Remember, I said we spoke about the centralized finance, where it is totally in control of the hands of the government. All right. And most of us, if we are critical enough, we actually realize that it is not something that you would like to continue to be in, because the value of our money keeps reducing by the day. Inflation keeps going up, cost of living keeps going up, but the value of the money you earn keeps reducing by the day. That is one of the disadvantages of this centralized finance system that we have. Because the value of that money is not determined by the masses, or it's not determined by us. The value of our money is actually determined by some few people sitting somewhere in the name of a government. So how do we take that power out of their hands and give it back to the people? That is where decentralized finance came in. I'll talk more about that as well. So we say a blockchain is a decentralized and distributed digital ledger. Digital is a software, digital software, right? That's why I said software is the new oil. Distributed, decentralized ledger, which is used to record transactions across a network of computers, such that that record cannot be altered after it has been created. You can't delete it, and you can't change it either. And to let you get the picture of it, this is how it looks like. So the blockchain is simply like a network of computers, okay? Millions and billions of network of computers, which record transactions that happen on it, and which give some kind of authenticity to transactions, okay? So when a transaction is initiated on the blockchain, what happens is that it is kind of divided into these pieces and distributed across a bunch of computers. And each computer plays a role to validate that particular transaction and say that this transaction is authentic. So when all these network of computers have agreed that this transaction is authentic, then it is recorded on all these millions of computers, such that each person can see the whole transaction. But because the control is in the hands of a network, a single computer cannot alter that transaction again. We are talking about security here, okay? So it's more like this. So you have these blocks of transactions, if you can see here. So they are like blocks of transactions, okay, which are linked by chain. So simply that's where the blockchain comes from, which are verified by this network of computers, okay? So what makes the blockchain unique? Network consensus, cryptography, market cap. Now, network consensus is just what I've explained. If you do a bank transaction, it's just a single transaction, and the only evidence you have is maybe your bank transfer record, which is held by the bank. So now if anything happens to that bank database, that whole transaction disappears. You can't get it back. And if you need it for maybe legal purposes, you can never get it back. But on the blockchain, each transaction, like I said, is distributed on a network of computers. And because of that, it can't be deleted, it can't be altered. Okay, because it's not one computer that is in charge of that, or it's a network of computers across the internet. Even if one computer goes wrong, still that transaction is still there. You can't create it. You can't, I mean, you can't change it. You can't delete it. The moment all these network of computers agree that this transaction is valid and record it on the blockchain, it is there forever. You can't change it and you can never delete it. And cryptography simply means that when you see the word crypto, it means hidden. So it gives the transaction some kind of security, because most if you take a single transaction like a bank transfer or mobile money transfer, it can easily be hacked or it can even be intercepted. But when it is hidden in form of cryptography, it gives it security and protects it from hacks and interceptions of that kind. And the other thing is MCAP. MCAP simply means market, what do you call that? Market capitalization, okay? And when we talk about MCAP, to understand it in layman's terms, what it means is that everything that is created in terms of cryptocurrencies, everything that is created or every cryptocurrency has a maximum supply on the market, okay? It's not like the fiat currency that the government can get up any day and print as many as they want, because the more they are creating, the more the value of the currency is going down, all right? Simple, these are simple laws of supply and demand, okay? But in the crypto industry market or in the blockchain, every cryptocurrency that is created has a limited amount that exists. And for some of them, even over time, we have these deflationary processes that go on that keeps reducing the supply, thereby increasing the price or the value of that particular cryptocurrency. So MCAP is simply talking about the fact that that limitation in supply, which limits the supply and thereby giving the chance for that particular token to increase in value. And how does it increase in value? The value of any token or any cryptocurrency is determined by we, the people, based on demand and supply. So if we decide the value of our cryptocurrencies, which is literally money on the blockchain, okay, we determine the value. It's no longer the government. So we've taken the power over the value of our monies out of the hands of the government into the hands of the people, where depending on our usage of those particular cryptocurrencies, that determines the value of the money we hold in form of cryptocurrencies. So at this point, if you are following so far and you are getting value, just type following. Type following so that I'll know that you are still with me as we continue. If you are following so far, just let me know. Type following. If you are following so far, let me know in the chat box. Following. Just type following. All right. Okay, so we are just getting started. There's a lot we have to learn today. Thank you all for the responses. Thank you all for the responses. Now, one thing that gives the blockchain security is that I told you it's a network of computers, millions and billions of them, that hold and record these transactions. And before someone can be able to hack the blockchain, the person needs to gain control over 51% of these computers, which at the moment, there is no technology available that will give any single computer that amount of power to be able to hack 51% of the millions and billions of computers that are, performing these validations on the blockchain. So that gives it the security compared to the centralized system that we had. Okay. Now let's come to cryptocurrencies, which is just one application of the blockchain. So the blockchain is a technology, which is the decentralized and distributed data ledger. So that's the technology. Now this ledger is available for people to apply it in any way they like to create decentralized systems. So cryptocurrencies is just one application of the blockchain. Cryptocurrency is not equal to blockchain. Cryptocurrencies or cryptocurrency is an application of the blockchain. Okay. And I already told you, crypto means what? Encrypted or hidden. Okay. And currency talks about money. So when we talk about cryptocurrency, what it simply means is hidden or encrypted money. I already spoke about that, and I told that's one of the things that give the blockchain security and make it hack-proof compared to the traditional systems. Okay. So I already spoke about the mobile money thing, because if you are sending money to someone, that's something that can easily be hacked. All right. It's just a single transaction that can easily be, deleted in any way or intercepted or hacked in any way possible. But on the blockchain is different. And for people who really don't really get the concept of cryptocurrencies, look at it from the concept of e-cash. When I say e-cash, your mobile money you are holding on your phone, that's e-cash. Okay. If you see mobile money and you see that it's real, then you can easily see that cryptocurrencies are real, because it's just another extension of that e-cash you are holding on your mobile money or your Vodafone cash. It's just similar to the e-cash you are holding on your credit or your debit card. When you check your bank account on your phone and you see money there, physically you don't have the money, but you believe you have money. So it's just the same thing. It's a store of value. That's what money is, a store of value. In whatever way we agree on it to store that value, that is what gives, that's money. Okay. All right. So now examples of cryptocurrencies. So we have Bitcoin, we have Ethereum, Litecoin, Polkadot. There are I think over 100,000 of these coins. So Bitcoin is just one example of a cryptocurrency, and cryptocurrency is just one single application of the blockchain. That's why I told you that the Bitcoin, a lot of people hear of, and they don't even know what it is, and a lot of people have a lot of misconceptions about it. It's just a tiny dot of one big and vast industry, which has a lot of applications, and we are going to see that as we go on. Okay. So at this point, if it's clear to you, you understand and you are following, type 222 in the chat box. Let me know that you understand so far what I've shared with you. If you understand so far what I've shared, because I'm about to move into another zone, you type 222 in the chat box. All right. Thank you. Can come. 222. If you understand so far what's going on, 222. Thank you, Adiza. All right, Bismarck. Thank you. Thank you all so much. So let's zoom in a little bit more. Now, if you look at cryptocurrencies as goods or an exchange or a store of value, it's just like you have tomatoes, we have yam, we have all that, and go back to the history of money, barter trade and all that. You need, it's an exchange of value, right? So you need a place to store that value, and you also need a place where you can exchange that value. I don't know if you get the point I'm making. It's a store of value. So, and every store of value, it needs a place where you can hold that value or where you can store that value. And you need a place where you can exchange that value for things that you need. On the blockchain, and when it comes to cryptocurrencies, we have what we call the wallets and the exchanges. Wallets are like the storage houses. That's where you store your cryptocurrency. That's where you hold your cryptocurrencies. Okay. So that whenever you now need to exchange it for a different thing, you now move to the marketplace. And the marketplace are the exchanges where you can do your buying and selling of this, or the exchange of this store of value. Okay. So exchanges is like the marketplace where we do buying and selling of cryptocurrencies. Wallets are places where we hold our cryptocurrencies. We store them for future exchange or for future transactions. All right. And the wallets, we have custodial, non-custodial. I won't go into that today. But what you need to know that it's like, one of them is like you having a money box in your house. That money box, when you put any money there, you are the one solely in control of that money box. Okay. It's completely under your control. Or you put the money in your room and lock the door and you are holding the key. You are the one solely in control of that money because you are the one holding the key to the door that opens into the room where the money is kept. That is more like So if you get it, money box analogy, okay? So it is there. So non-custodial wallets are third parties such as exchanges and brokerages. So if you I'll look at some of the exchanges. We have Binance and all, Binance OKX. So when you put your money on an exchange, that is like a website on the internet somewhere, or an app that is built by some company, and they are kind of in complete control of what is happening on that website. That is more like a custodial wallet, okay? So it means that when you are not the one in control of it. Custodial wallets, you don't have complete control over your money, because if you are holding it on that website and God forbid the website should get hacked or something, anything can happen to your money. But non-custodial wallets are the ones that you are completely in control of. That's the one that's like the money box. So that's a non-custodial. So an example is trust wallets, okay? So when you hold your money in your trust wallet, you hold your cryptocurrencies in your trust wallet, no one can touch it except you. Okay, so that's the difference between custodial and non-custodial wallets. Then when it comes to exchanges, so the exchanges, like I said, are the marketplaces. But one thing you need to note or understand is that each exchange has an inbuilt wallet, because before, it's like you are in the market. Before you can do buying and selling in the market, the goods or service that you are buying must be in the market. You can't go and buy tomatoes in the market if the market woman is not sitting there with the tomatoes. Or you go there without money, you can't transact, all right? So each exchange has an inbuilt wallet in it. And those are what we call the custodial wallets. So wallets on exchanges for the purposes of you holding and trading the cryptocurrencies. Those are the custodial wallets. Now, when you come to the wallets, we have what we call the centralized wallets and the decentralized wallets, okay? Centralized wallets are like I was explaining, these ones, you have a central one, a company built the exchange, and they have some kind of control over what is happening on that exchange, okay? But decentralized exchanges, those ones mostly, you can't trace it back to a single company that has control over it. It's just created on the blockchain and is there for people to use. More like that, okay? Remember, that is centralized means that you have a single authoritative figure that has some kind of maximum control over that, and that's what makes it centralized. But when it becomes decentralized, it means that there's no central control unit. It is literally out there and the masses are in control of it. All right. Now, how this whole crypto thing started, it started with the creation of Bitcoin, okay, somewhere in 2009. But the original concept of cryptocurrencies was conceived somewhere in 1998. This, I won't go through this for the sake of time today. But the real, what will I say? Real tradable or cryptocurrencies that was created, the first time cryptocurrency was traded and available, made available for people to use it in exchange for physical world goods and services, was somewhere around 2009. And that was created by the man with the pseudonym Satoshi Nakamoto, which till date nobody still knows who actually he is. And when Bitcoin was created, we had, I told you about the market cap, okay? I told you about the market cap where every cryptocurrency has a limited supply. You can't have more than that in the market at any point in time. You can have less, but it can't go beyond that, okay? So the supply of Bitcoin from its creation was about 21 million, and it has been going down over the years, but it can never go up again. So if supply is going down, you understand why the price will go up. Supply and demand, okay? Now, this whole history, you can find it elsewhere, or you can get a slide later and look at it. But one interesting that happened was somewhere in, I think, 2010. In 2010, we had the Bitcoin Pi Day, something like that, where someone who, when Bitcoin was created, let me just mention this. When Bitcoin was created, the starting price as around 2009 was about $0.0025. 0.0025. You can write that down. I think that's not even up to 1 cent, if I'm right. 0.0025. So it means that if you had $10 by then and you wanted to buy Bitcoin, you could buy about 10 times that would have given you about, I think, 25,000 or so, if I'm right. Somebody can do the maths and put it on the chat box. You have $10, and the cost is $0.0025. So let's divide that and see how many Bitcoins you could have bought with $10 back in 2009. Somebody should do the calculation and put it in the chat box for us. The price is 0.0025 and you have $10. How much Bitcoin would you have bought with $10 back in 2009? Oh, no mathematician in the house. Somebody should just do the calculation. Good. Thank you so much, Jefferson. And then 5 cents. Okay. 4,000. So you could have bought 4,000 Bitcoin with just $10 back in 2009. Now, as at today, as we are here, the price of Bitcoin is around, last I checked, it was around 41,000. Between 41,000 to 42,000. Now, imagine, so the mathematicians in the house, multiply 4,000 by 41,000. What will you get? 4,000 times 41,000. What will you get? Right, and Jefferson, we are waiting for the answer. Thank you. So that's what, let me see. 3 zeros, another 3 zeros. So that's like 164 million, if I'm right. So it means that someone who invested $10 in Bitcoin back then and was able to hold it till now, the person would have been worth 164 million US dollars. I'm intentionally keeping quiet so that you can assimilate that. A $10 investment in Bitcoin back in 2009, today would have been worth 164 million US dollars. From 2009 to date, is how many years now? You can look at it and imagine that you are going to work for at least 30 years of your life. You never make that money with your current salary, or even with the salary. No salary can pay you that amount within the whole years you work and go on retirement. Okay, so that tells us about patience, and it tells us about the potential of the blockchain and cryptocurrency industry. If you are patient enough, trust me, you can build wealth, sustainable wealth out of this industry. And since then, but there was something that happened around 2010. Someone who actually got Bitcoin at a very cheap price decided to test and see if he could actually use the Bitcoin, to buy something in the real world. So he decided to use 10,000 Bitcoins to buy 2 boxes of pizza. I think today with at least about 100 cedis, you can get those 2 boxes of pizza and then you'll be full with your family. 10,000 Bitcoins, he bought 2 boxes of pizza. Now that 10,000 Bitcoin today is worth, I think, over, if you are multiplying it by this, that's over 40, it's worth over 41, or is it 410 million? I think about 41 million, right? The math is not very good with me. So that's 410 million in dollars. So it is, I'm telling you this is an interesting fact in history, and that actually happened. If this man was patient enough to hold that 10,000, even let's even say half of that Bitcoin he used to buy the pizza, today he'll be a millionaire. And this should tell you about the psychology behind building wealth in the blockchain industry. All right. Then we had the creation of Ethereum. Ethereum came later. Then later we had Litecoin, and since then we've had so many cryptocurrencies coming up. But what we need to understand is that these cryptocurrencies, they are not just, it's not like internet money or online money. Every cryptocurrency you see is a piece of software. That's why I told you softwares are the new oil of the 21st century. Every cryptocurrency you see is a piece of software. Now the question is, what that software is created to do? That gives the software what we call a use case, okay? And the use case of the software will determine the value and the potential that that cryptocurrency has to increase in value. So if you are here, you are seeing cryptocurrencies as some internet money or online money that will just get up one day and disappear. I just want you to know that these cryptocurrencies are not just online money. They are real life softwares that have been coded, just like the software, your WhatsApp you're using on your phone, for a particular purpose. And that purpose, when people start adapting the use case, or that people start using that particular purpose or that particular coin for the purpose it was created for, then that gives it value. That's why I said cryptocurrencies are decentralized, in the sense that we, the people, give it value by our usage of that particular cryptocurrency. It's no longer in the hands of the government, it's now in our hands. And that's why Bitcoin, because it's in the hands of the masses, governments have been trying over the years to kind of cut off Bitcoin and then kill it, kill the whole cryptocurrency industry, kill the whole blockchain industry. But it's beyond their control, because this is one of the first conceptions that are actually giving real power to the people and taking that power completely out of the hands of the government. And we've had so many cryptocurrencies since then coming up, okay? And a lot of people today are still looking to buy Bitcoin and all that. It's good. You must get as much Bitcoin as you can, because Bitcoin is still getting started. The whole blockchain industry is just getting started, okay? But before you get there, know that you need to start from somewhere. If you just get up and go straight to buy Bitcoin, you might end up using all your life savings and you only get 0.00000 something Bitcoin. But we have newer cryptocurrencies which are created for very promising and very, what do I say, with very huge potentials based on the purpose that they were created and the use case that they were created for. And when you join the right community, when you get into the right community, when you have the right mentors and the right people guiding you, they will lead you into these promising projects on the blockchain, these promising cryptocurrencies that you can still invest in. They don't cost much now, but just like Bitcoin, it can also, in the near future, rise in value. And if you can start now investing in those things, give yourself some years, be patient and wait. Eventually, you could be sitting on some millions or billions, depending on how patient you are and which projects you are investing in. All right. So this is a huge industry. Don't let your ignorance or any misconceptions out there, make you undervalue what this can be for you, because whether you like it or not, this is the future of finance. This is the future of money. And the sooner you get into understand it and acknowledge that you must be a part of the new trend, the new revolution, and take a piece of this new oil of the 21st century, the earlier for you. If not, your children will start coming to tell you things and you think they are crazy. And sometimes you look stupid for not knowing certain things. Excuse my word, but that's it, okay? Now, crypto mass adoption, what has been happening? It went from individuals trying to adopt it. Now we have institutions and even governments and, whole countries getting into the industry. So these are just a few of them. Marathon invests 150 million in Bitcoin. Elon Musk purchased Bitcoin and all that. JP Morgan, this is one of the biggest banks in the US. They are getting into the blockchain industry and getting into the cryptocurrency market. We have some places where they are now trying to pay people in cryptocurrencies instead of fiat currencies, which, if you understand the value of this industry, makes sense, because your salary that they are paying you, if they pay you 10,000 Ghana cedis today, in 1 year, that 10,000 Ghana cedis will lose value, whether you like it or not. Even if you save it in the bank, and they are giving you interest. Trust me, that bank interest is nothing. And as long as there's inflation and cost of living is going up, your 10,000 in 1 year will be worth less than what it was when it was given to you. But imagine that they had paid you in Bitcoin, maybe your salary is like $100, and back into somewhere 2010, your salary of $100 was paid to you in the form of Bitcoin. Do you know how rich you will be today with that payment and salary? So just ponder about some of these things, okay? Some African countries have been fighting, but some too are trying to adapt it. So this is just it. All right. Now, how do you make money in the blockchain industry? How do you make money on using cryptocurrencies? These are just some of them. So we have mining, we have staking, lending. Some of these things will sound like the normal things we do because you can borrow money from the bank, you can lend money to someone, they'll pay you back in interest. Yes, you can do that on the blockchain too, using what we call the decentralized finance systems, DeFi. You see that also. So you can do your swing trading, okay? You can do hodling. That's when you buy a particular coin which has the potential or a good use case, and you know that over a long period of time, that coin is going to increase in value, and you buy an amount of it and you hold it for some months, for some years, and whenever it rises in value and you feel like taking profit, you take your profit, okay? So that's long-term. HODL is more like holding for a long term, okay? That's what I mean by HODL. All right, so staking, mining. Those of you who have heard of Pi Network. Pi Network is one of those coins that you get the coin by mining, okay? And when they launch it, the Pi that you've mined, which you got for free, will actually become real money because at that point, when it's launched, it becomes a real cryptocurrency, which you can move into the exchanges, and then you sell it and you get your money out. All right. Staking is there. Staking is like you give your money to one of the exchanges to use it for transactions. They hold it, and because they're holding your money, they keep giving you interest either on a weekly basis or monthly basis or daily basis. All right. But anytime you want your cryptocurrencies, you can always get your initial principal back, and all the interest that you've earned on it is yours. These are things you are doing with the bank, but it is even more lucrative on the blockchain. All right. Lending, I've spoken about the swing trading. Swing trading is like you buy when the price is low, you sell when the price goes up. And that's the basic rule of crypto trading. Buy low, sell high. Okay. You buy low, you sell high. I think I'll have to talk about this a little bit because this is one of the problems that we have. So before I move into the next place, I think let me just talk about this. Day trading, there are people, this is their day work. Crypto trading is their day work, so they can sit down and be monitoring crypto charts. And whenever the price is low, they buy, then they give themselves a target. When it rises to their target, they sell off, they take their money, they've made their profit, okay? IDOs, ICOs, before new coins come to the market, sometimes they sell them at a very reduced price, and then when they are launching them into the market, they launch it at a higher price. So those who got it at the lower price, you can sell or you can hold it till the price rises to any place you want, then you sell off, okay? Airdrops, bounties, these are all things, ways you can make money in the blockchain industry. Now, a lot of people have this misconception of Bitcoin is a scam or cryptocurrencies are scams and all that. And it is because of ignorance, it's because of lack of knowledge, okay? If you are following, type in the chat box, lack of knowledge. Lack of knowledge. If you are following, just type lack of knowledge. Because the only way you lose money in this industry is mostly because you lack knowledge. Frankie, thank you. If you are following, just type lack of knowledge before I continue. Right, thank you. Okay. All right, I'm seeing familiar names. I want to see some people that I know that are not very vested in the crypto industry type. All right, so thank you all for your responses. Lack of knowledge is why people have these misconceptions and why people lose money. The basic rule for crypto trading is this: you buy low and you sell high, which is common sense. If you want to make profit on something, you don't go and buy it when the price is high. Then when the price goes down, you go and sell. That goes against common sense. All right. So now, but there are people who we have what we call the euphoric adopters or euphoric buyers. And let me just explain that in a little bit. Euphoria, you understand euphoria? When you say euphoria, there's this excitement. A lot of people are making noise about something. There's this euphoria surrounding it. So we have these euphoric traders or these euphoric buyers or adopters who will just be there. Then the moment they hear Bitcoin price is going up, then you see they will rush and come into the market and buy. Then in a few days' time, as is normal, the price of Bitcoin falls down a little bit. Then they feel like they are losing their money. Then it falls down a little more. Then they feel like this thing is going to crash. So immediately they sell off. And the moment you sell off below the price at which you bought it, you've lost money. But the reason why I did that is because you don't even understand what you are doing. So you losing money is not because Bitcoin is a scam or cryptocurrency is a scam. It's because you don't understand what the industry is about. You don't have the right trading psychology. And that is not something you can learn in one day. Okay, this is just an introduction to open up your mind to the industry so that you can now research more, join the community if you like to, get in, learn more, we'll guide you, and then we'll pull you along and we'll all grow together in it, okay? And the other reason why people sometimes associate Bitcoin and cryptocurrencies with scam is because you are too lazy to research and you are too lazy to learn, but you are eager to make quick money. So you are there and somebody says there's this new system. They say when you bring Bitcoin in 2 days time, they'll give you 3 times your Bitcoin. You don't even know what blockchain is. You don't know what cryptocurrency trading is. And you just give your money out. Somebody buy Bitcoin, push it into the system. Then the next day, the system disappears. And you come back and say, Bitcoin people have scammed you. It's not Bitcoin people, and it's not Bitcoin that scammed you. Someone is intelligent. Someone had knowledge you didn't have and used that knowledge against you. Because there are people who are creating referral systems. Okay, that's what I call them. Referral systems, people who are creating these unsustainable investment schemes and using cryptocurrencies as their means of payment. I want you to take note of this. Take note of what I'm saying right here. People are creating referral systems and creating investment schemes, most of them unsustainable investment schemes. And they use Bitcoin or other cryptocurrencies as the means of payment. Because that is what these cryptocurrencies are. They are just a means of payment and a store of value. Now, that person, the sustainability of that referral system you are going to join, or that investment scheme you are going to join, has nothing to do with Bitcoin or cryptocurrency. For you to understand this better, if somebody creates a business, an investment scheme and says, you bring your money and in 1 week time, you get 100% of your money as interest. And the person says that you make your payment through mobile money to a certain number. When you make that payment from your mobile money to that number they've given you, for your money to be doubled in 7 days, if the person you send the money to disappears the next day, will you come back and say that mobile money scammed you or mobile money is a scam? Or is the person you send the money to that is the scam or the fraudster? Which one is it? This one I want to see your response in the chat box. Is it mobile money that scammed you or is the person that you send the money to? Let me see your response in the chat box before I continue. Who scammed you, mobile money or the person who created that investment scheme? The person, right? Right. So that is the point you need to understand. There's nothing scam or fraudulent about cryptocurrency or Bitcoin or blockchain. Okay, that's also possible. It could be you yourself. So if you join something and they use Bitcoin or other cryptocurrencies as a means of payment and they scammed you, that doesn't make cryptocurrency, blockchain, or Bitcoin the scam. You just lack knowledge and somebody took advantage of your ignorance and created a system and made you to pay money through that particular means. So let's get this. you lose money when you get scammed because of your lack of knowledge, or when you come in, you are a euphoric trader or euphoric adopter who comes in when the market is booming, and the moment the market falls a little bit, then you jump out. Okay, because what we need to understand is that we have short-term rises and falls in the market. It's a cycle. Okay, supply, demand. There's a time the market goes down. A lot of people buy. Those who understand the market, that is the time they are buying, when the market is going down or has gone down. That's when a lot of people buy. And as more people start buying and buying and buying these cryptocurrencies, what happens is that the price will ordinarily and naturally start going up, because you have more people buying than more people who are selling. And that will increase price. Demand is now increasing. And once demand is increasing with a fixed supply, definitely price is likely to go up. Basic economics. Okay. So as the price rises, definitely those who bought when the price went down, when the price goes up to a certain point, they have to take profit. So they'll sell off some of their cryptocurrencies. So at that point, you realize that you may have more people selling than more people buying. And naturally, once again, demand will start going down. And once demand starts going down, the price is likely to go down with it. This is basic economics. I hope you understand this. I hope you understand this. If you understand this, just type 1 in the chat box as we continue. Okay, because this is, you need to get this. Because this is one understanding that people lack, and they are holding these misconceptions that prevents them from actually taking advantage or leveraging on the blockchain industry. Okay, the short-term rises and falls are normal, but what you need to look out for is good projects. And when I say good projects, even with these short-term rises and falls, what happens is that when you look at it over a long period of time, maybe let's take Bitcoin for instance. Imagine from the price of 0.0025, the price of Bitcoin in the short term has been rising and falling, but today the price of Bitcoin is around 41,000, 42,000. So that tells you that in the long term, there is a lot of wealth you can make out of the industry. But in the short term, it is normal that the money, when you buy today, maybe you buy with $100, the value may go down tomorrow to rise a little bit, the next day it will fall. That is normal. But in the long term, what happens to that value? That's what you should be looking at long term. That's why I talk about patience. Okay. And if you can build that right psychology and understand that short-term rises and falls are normal, but what you need to look out for is the long-term rise in value, then you can really build something out of this industry. If you cannot comprehend that and you cannot accept that, or you cannot build that to this psychology, then this industry is not made for you. Just go back to your normal everyday work and continue your everyday stuff as you already know. All right. So I think I've spoken a lot about this because I need to make this clear so that your mind will be clear as to how people lose money, why there's so many misconceptions surrounding the blockchain and Bitcoin industry out there. Okay. Now, let's move ahead. So trends in the blockchain industry. So we have, this is just what has been happening and where the world is moving towards with blockchain. Like I said, cryptocurrencies are just one single application of the blockchain. So we have other ones, but it has created the basis for most of the things that we are having on the blockchain now. Basically, some years back, I'm sure the only thing people were doing is that they buy a cryptocurrency, when the price rises, they sell, that's all. But later they introduced decentralized finance or DeFi, where you could now, literally DeFi is like bringing the banking system onto the blockchain, where you can loan your money, you can borrow money, you can earn interest in your money by saving it or by giving it out as a loan and all that. That's what decentralized finance is all about, okay? There's a lot more to it, a lot more applications to it. We have NFTs, non-fungible tokens. Okay, to understand NFTs, let's just take, if you follow art, okay, an example, I think the Madonna painted by Leonardo da Vinci. That is something that was painted years ago, And over the years, its price has been rising in value because there's a unique story behind it. There's a very unique story behind it, and it has given it some special value that someone holding it, it gives the person a special feel, okay? And these artworks are there, and people buy them for as millions and billions of dollars, all right? But we have the situation where people make counterfeit versions of these things. And that is one problem mostly art people face. So now NFTs is a way of bringing such special artworks into the blockchain, where when you create an NFT or an artwork on the blockchain, remember every transaction on the blockchain is validated and recorded on a network of computers such that no single individual can change it. And also, only one copy of that transaction can be on the blockchain. Only one copy. You can't have more than one copy of that particular transaction in the blockchain. So it means that when you create an artwork on the blockchain, only one copy of that particular artwork can ever exist on the blockchain. And that's the only one people can keep buying and reselling, all right? So people are now looking for ways to get such creative works onto the blockchain to protect them, one, and one, to also kind of increase the value of it, okay? And it moves from just artwork to almost everything you do, from sports to gaming and all that. So Sorare is more like the NFT market for football. So imagine Messi scores a very special goal, okay? It's one of the best goals ever scored in the history of football. That particular video, that particular moment when he scored that goal, they can capture just that part as a video and put it on the blockchain and give it a value or a price in the form of cryptocurrency. And because it was a special moment, just like the Madonna, people will be willing to pay certain huge amounts of money to hold it, because remember I said it is only one copy of that thing that can exist. So imagine out of all the people in the world, you are the only one holding that single thing on the blockchain. Imagine what that means, all right? FI Delta time, I think that one is for the, what do you call this one? I've forgotten the sports. NBA Top Shots, forgive my spelling of Top Shots, I'll correct it later. NBA Top Shot, those of you who are interested in basketball, special moments from the NBA are captured and put on the blockchain. And trust me, people are paying millions and tens of thousands of dollars just to own those moments on the blockchain. And with time, the price rises and they can sell it, okay? There are so many of them, okay? So that's just about NFTs. Then Formula One, yes, Formula One is FI Delta time. Thank you, Frankie. Metaverse is there. That's one of the latest trends now that is happening. And Metaverse, those of you who are aware, Facebook has changed their name from Facebook to Meta. And that's because they are trying to get into the Metaverse. And simply, Metaverse is like a virtual universe, okay? Where you can get into the virtual universe, create a different version of yourself as you want, do all the things you can, the crazy things you can do inside that world and come out without any consequences in the real world, something more like that, okay? And we have a lot of things happening, a lot of new projects coming in there. And this is also made possible by the blockchain, all right? So imagine maybe the way you usually chat with someone on Facebook. Imagine a system is created where when you are chatting with someone on Facebook, you get into this virtual world where it's like the person is just sitting right in front of you and the two of you are talking. I'm just trying to use that so that you can picture it, okay? But also with the metaverse, they are trying to create this system where almost everything that is physically on the earth can be moved onto the blockchain in a digital form. So you can own a land, you can buy a land physically by buying a digital version of that land on the blockchain. And because on the blockchain, only one copy of that land can exist on the blockchain, by linking that physical land to the block to a digital form of it on the blockchain, when you buy it, the issues of this land litigation and then someone selling a land to you and going back to sell it to a different person, all those issues will kind of, be cut off, all right? So you can buy real estate on the blockchain and it will give you ownership of an actual real estate in the real world. All right. So I think there are a lot of spelling mistakes on this particular slide, but don't worry. The sandbox is also there. There are so many things happening in the metaverse, so many projects coming up. All right. And this is one of the places that projects with cryptocurrencies that are into the metaverse, you look at them and you can invest in those for the next few years. They are definitely going to do well. GameFi, game finance, or gaming finance. This is one of those places. Me, I don't play video games. It's very difficult for me to actually sit down and just play video games. But a lot of you play video games and you play it, waste your data, waste your phone battery, and you get nothing. Now, the blockchain has made it possible that you can play games and get paid in real money in terms of cryptocurrencies. Real money for just playing the games that you've been playing, all right? And there are so many projects that are making this possible. Axie Infinity is there, Somnium Space, DeFi Kingdoms, MetaSoccer. MetaSoccer is one of the latest ones, and what MetaSoccer is trying to do is put your, I don't know, I think there's this thing called Football Manager, where you can create your own team, then give it a play strategy, then you play games, you can win. But with that one, the money you earn there is not real money you can spend in the real world. Then we have your FIFA and your PES that you've been playing. All these things, you do them, you don't get any money for it. Then we have soccer betting that a lot of young people are now into. Meta Soccer is trying to bring all these three into one space where you can be a football manager, be a player, or bet on it or whatever. All these things, you do them on the blockchain and you earn real cryptocurrencies. That is real money you can actually spend. Okay, so that you don't just play your games and waste your time for nothing. I think this is an interesting concept. Okay, and these are all applications of blockchain. So it just goes beyond Bitcoin. Okay, Bitcoin is a tiny speck of this whole big industry, and there's a lot more to it that you don't know about. Okay, and it's high time you start getting into it, get to understand what it's all about, plug yourself in, and let the right people lead you to leverage on this industry. Because whether you like it or not, very soon you'll be left behind if you don't start now. Okay. Now, where do you start from? Because it seems like there's a whole lot to learn, and sometimes it's even confusing for a lot of people. Where can you start from? Now, before I go on to where you can start from, I just want to let you know, this is an introductory session. So like I said, I'm not coming here to tell you how you can go onto the market and how you can buy cryptocurrencies and how you can sell them to make money. If I do that, I'll be jumping the gun because this is for beginners. And you need to understand the basis or the potential of what you are getting to before you get into it. You need to have the right trading psychology before you get into it. So as we go further, as we go ahead in the future, we'll have more practical sessions where I can actually take you through the exchanges and how you can buy and sell cryptocurrencies to make money, how you can get into the NFT markets, and all that. You have people, especially those of you that are in the paid community. We will soon have a lot of training sessions, okay, where people will come and teach us how we can actually make money from most of these, trends and applications of the blockchain. Okay, so there's a lot coming. So this is just to open up your mind to the industry. Don't be too eager to just start jumping and start putting money and making money. It doesn't work like that. Patience, learn, build on your knowledge, apply the knowledge you've learn from it, adapt, and then re-strategize and keep going. That's how we grow. So where do you start from? Now, like I said, the best way to grow in any industry is to first of all, find a community where you have like-minded people, a community where on a daily basis, they talk about that particular industry, a community where you have resource persons who can guide you and pull your hand to succeed in that industry, and have a coach or a mentor who can lead you in that industry to grow, point you in the right directions. And when you don't know where to go, the person will hold your hand and point you where to go, all right? And this is just, I want to show you this so that you understand the potential or the importance of belonging to a community and why you need to be guided by someone. because truth is that you can go on YouTube and there are a lot of videos on blockchain and cryptocurrency trading on the YouTube that you can go and watch and get knowledge. But for you to be able to really apply that knowledge is a different thing. If that works for you, fine. But what works for me is I like to belong to communities, physical communities where real people that I can talk to, that we can share knowledge, and we can give each other guidance as we go along. All right. The community we belong to, this is on the, if you are looking on the I think, so you are facing your screen. So to your left, okay, to your left, you see on this day last year, this was as at 24th December. So 24th December 2020, in our community, a number of coins came up, and this is the list, and you can see these are the prices of the coins as at that time. Okay, so AVAX $3, Luna $0.5, Sol 1.4549. So these were the prices back then for these cryptocurrencies. Some people bought them around that time. Some people didn't buy. Okay, some people were skeptical about it and all. People had their reasons. Some didn't have money to buy for so many reasons. Now, a year down the lane, 12 months down the lane, on the 24th of December 2021, when you look on the right, or to your right, you see the current prices of those coins. AVAX, which was $3 back then, is now $123. Somebody's talking. Let me mute the person.
Hello, July.
Yes.
Listen, phone, but it's not on the screen. I mean.
Oh, okay.
Yeah. It's the slide that's still on is the trends in blockchain industry, and it seems you are talking about.
No, then possibly it's your network, because I can see here, I'm using my phone and my PC, and my PC I'm presenting. On my phone, I'm monitoring which slide is currently showing. On my phone, it's showing the current slide. Is anyone else experiencing that trend, that problem? Are you still seeing blockchain trends? Or you are seeing the one with the prices I'm talking about? All right, so I think it's your network. So you please check your network. Sometimes the network delays.
Oh, all right. All right, thank you.
So Luna, which was around $0.5 last November, that's December 2020, as of December 2021 was $97. Sol was $1.49 as of December 2021. That's the ending of last year. It was trading around $190. I think currently it has dropped because the market is going down a little. So you can just look at that slide and imagine that if back then you had put $100 and bought any of these tokens, today, how much money will you be holding in your hand 1 year down the lane? Really ponder upon this. Who else is seeing something else other than the list of coins with prices? Okay, because some people are seeing with the prices, so it will be your network where you are. So just currently check that. Okay. So this is the reality of the industry. You need patience, because I'm sure somebody bought AVAX when it was around $3, and maybe in a few weeks' time, there was a short-term fall. It fell to like $2, and the person panicked and sold off and said he lost money to cryptocurrency. But if that person has held it to date, the person would have been worth a lot of money, because from $3 to $123, it means per each AVAX bought at that time, you've made a profit of $100 per single AVAX that would have been bought at that time. So this is the potential that the industry has to offer. And you need to find yourself in the right places to take advantage and leverage on the industry. Okay. I think we are just about rounding up. So this, we have our mother community, crypto elites. You can see at the top there, I think, let me see if I can just show you this. I'm currently wearing my Crypto Elites merch, okay? So this is our mother community, Crypto Elites. If you can see the video at the top of the screen, that's our mother community, Crypto Elites, all right? When I started cryptocurrency trading, that was the community I got into. Then my coach and mentor and good friend, Atwill, also, he became the leader of the Crypto Elites community in Ghana, and through that, eventually, we created the Ghanaian community, Rafika, which is Rayach Finance Academy. And through Rafika, we have our goal of raising a tribe of change makers and a tribe of crypto billionaires, leveraging on the opportunities, the vast opportunities that lie within the blockchain industry. So if you are someone, and you can see the training model, so we will give you introduction to the blockchain technology, cryptocurrencies, how you evaluate cryptocurrencies to know which ones are good and which ones are not, which ones you can invest in for long term, which one you should invest in for short term, trading in the market. So it's actually, I think, a 6-hour course, video course, okay? When you purchase the course, we will make that available to you and you study it. Then it will teach you practical trading, how you go into the market, which markets you go into, how you do your daily trading and buying and selling, how you monitor the prices, the price charts, to know when to buy and when to sell and all that. So that's, the course is very holistic. And it's not just the course you get. You also have access to the community. So you have access to the Crypto Elites community, which is the mother community, which is global, with over 10,000 community members. I think in over 10 countries. I don't know the exact number of countries. And you have access to the Rafika community, and you have access to our daily trading tips and calls. You have access to timely information when it comes to getting into projects early before they hit the market, or even getting into good projects that are already existing, but people don't even know about them. Projects like that you can invest in today, and in some few years' time, they could make you millions. Those are the kind of projects we lead the community to find. So all these are there, and you will get our mentorship as well by belonging to the community. We will guide you through for some time so that you can become an independent, profitable trader. And aside that, we also give personal development trainings in the community and all that. So the course goes for $100, which is 600 Ghana cedis. If you're interested, right after the call on the page, I'll put it there. Those of you who have joined the page, I'll put it on our crypto page. You can message me privately, then we can get you started. Okay. Whenever you decide that you really want to take this industry serious, we are always here to work with you. All right. And I also wrote a book about finance, about money, understanding the money game, the rules and regulations. I mean, money has its own curriculum, okay? Money has its own curriculum. The mistake most people make is that they think that you can just make money without learning about money. I mean, if you want to be a nurse, you have to go to nursing training college. If you want to become a teacher, you have to go to the teacher training college. If you want to be a doctor, you have to go to the medical school. You want to make money and you don't think that it's important that you should learn about money. Money has its own curriculum. And until you learn about it and start applying the principles of money, believe me, no matter how much they pay you as salary, eventually you are going to end up in financial troubles. Because if you don't find ways to build systems that can pay you while you are sleeping, you are in trouble. If you cannot leave your work, go on a leave without pay for 6 months and still be comfortable financially, you are sitting on a time bomb. So The Money Farm is a book I've written. I don't have the picture here. I should have shown you the picture, but this is the website to my book. So you can head on there. Let me just type it in the chat box as well for those who would like to copy it or like to go there straight away. So it's www.themoneyfarmacademy.com. Okay, so you can just go there right away. Have a look. The details of the book is there. You can even buy it online, or if you want a physical copy, you can just contact me and we'll see how I'll get
Put me online. I have the book with me. Put me online. I have the book with me.
Come again. Oh,
I
yeah.
have the book. I'm just showing the book.
Oh, you have. I also have mine, though. But you don't worry. I have some copies here, so let me just show that to them.
Okay.
All right. So if you can see this, I think I can stop sharing my screen now because we are about ending, so they can see the book very well. All right. So this is the book, The Money Farm. Okay. So we have physical copies, and also we have the soft copies as well available on the website, which I'll put on the chat box, www.themoneyfarmacademy.com. You can head there right now and then get your copy. All right. So the website is on the chat box. Those of you who want to head there, you can just head there right now. And then you can buy a soft copy at 20 cedis from the website. You pay with mobile money, very easy process. Or if you want the hard copy, to just let me know after the call and I can get you a copy. It's literally just, when I say money farm, I'm talking about how money is a seed, and depending on where and how you plant it, how you nurture it over time, that will determine how much it will grow and how much fruit it will bear for you. So no matter where you are in life, no matter how little you are earning, if you can find the right fertile grounds, the right sustainable platforms to plant your money, you can always end up successful financially. So that's it. So if you have any questions, I'm done with the presentation. Thank you so much for being a part of today's presentation. I hope you got value. If you got value, just type in the chat box, real value, real value. If you got value from today's session, if you learned something from today's session, type something in the chat box. Let me know that you got real value from today's session. You learned something from today's session. Okay. All right. Thank you, Namde. Francis, thank you. Adiza, thank you. So, yeah, Lukman, thank you. If you have questions, any questions at this point, we'll take them within the next 2 minutes, then we'll close up. Any questions? If you have any questions, you can just let me know. I'll just unmute you. You raise your hand, I'll unmute you, and then you can, I think you can just unmute yourself because I've not really muted people or prevented you from unmute. Prince Ahinkra, you have a question? If you have a question, you can unmute yourself and ask. You can also type it in the chat box. You can raise your hand so that I'll call you to ask your question. I will mute you, ask the question. We'll do that within the next 2 minutes, and then we close for the night. Any questions?